Hi, so we are live. I'll just take another 15 seconds to begin. Let's wait for the audience to join in and settle in. Great. Hi, so this is Shashank Randev. I'm the founder VC at 100x.vc. Session. And today I have a very special guest, Nikhil Kapur, who is the partner at Stripe VC, a seed stage cross border Asia VC fund headquartered in Tokyo with offices in Singapore and Bangalore. Based in Singapore, Nikhil oversees India and Southeast Asia investments from the firm's recently raised third fund of $100 million. He has led the fund's investments in Indian SaaS startups such as Hasura, Classplus, Testsigma, and Medtrail in seed rounds. Previously, Nikhil has been a SaaS entrepreneur, having worked at Pi, which was sold to Google, built a profitable media tech venture in India, and developed Excel for mobile while at Microsoft. He is Forbes 30 under 30 and also runs a popular VC blog. Welcome to the live session, Nikhil. Thanks for being here and thanks for taking the time out.
Hey, thanks a lot for having me. My pleasure to be doing this.
Great. So first of all, let me begin by asking how's the day in Singapore? It's a holiday, I believe you mentioned, and how are things at your end during the current crisis? Let's begin with that, and then we'd love to understand how Strive VC is looking at startups in COVID-19.
Right. Thanks a lot, Shashank. So, Singapore is today quite rainy, a bit under the weather, and there's a lot of course, restrictions in the market in the city, just like in India as well. Overall, my day has been spent mostly doing household chores, which is something that I think everyone is starting to realize is a big part of what you do on a daily basis now, thanks to the whole COVID situation. As for the COVID impact on our fund, of course, it has a pretty deep impact, just similar to like how every company is facing, let's say, challenges and new opportunities as well at this point. I would say, just split it into two parts. One is on the portfolio side, and the other one is on fresh investments perspective. So I think I was just chatting with you also on the portfolio side. Almost 60 to 70% of our portfolio has been, let's say, negatively impacted, and I would say more obviously because of the lockdowns rather than COVID specifically. But that's lockdowns are part and parcel of this situation. So I think we are coming up with creative ways to address those challenges, and us being seed stage VCs and having a very active approach to our portfolio, that means we have to be very involved with the founders in figuring out all of these creative solutions towards these challenges, right? So a lot of my time and our fund's time is being spent on just doing that. Almost 60-70% of our time is now being spent on doing that. I would say the rest, 30 to 40%, is then spent on the other bucket, which is more towards finding fresh investments. And again, alluding to what we were discussing earlier, we were very lucky to have fundraised our third fund, which is now roughly around $110 million that we raised in December 2019, Jan 2020 timeframe. So it's a very fresh pool of capital. And of course, we have promised our LPs that we have to deploy that. And so, we are obviously trying to find good investments, especially in this current scenario of, let's say, immediate chaos. We're trying to find good investments at this point to continue to be doing those investments. So 30-40% of my time is being spent just that. Hey, sorry, Shashank, you're on mute. I can't hear you.
Sorry, my mistake. So, tell us a little more about Stripe VC's fund thesis, the kind of sectors you've traditionally invested in, what's been the take in terms of geography focus. Are you sector agnostic, or you have special focus on certain sectors and geography agnostic, or are you currently looking at mapping out certain set of 3, 4 countries and places around the globe right now? I would love to understand that.
Right. Thanks. So actually, our fund is a bit interesting in that perspective. We're not most funds, typically tend to focus on one geography, and that's what you would come across. I think we're a bit broader compared to most funds in that perspective. So we started our heritages in Japan, right? So Tokyo is our main HQ, and then we have a sort of a secondary HQ in Singapore where I'm based. And from these two sort of HQs, we cover the rest of Asia, right? So the whole of Asia, except China. So China is something that we don't invest in, but apart from that, we're pretty open across Asia where we should be investing. And that means Japan, Southeast Asia, and then India, right? Like those are sort of broad buckets. And within Southeast Asia, primarily focused on Indonesia and Vietnam and a bit in Singapore. So those are some of the markets that we focus on. And as you can imagine, this is obviously a lot to chew upon. And for this, we have separate teams which are handling sort of different parts of the business. We have a team in India now, which we recently set up. Although we have been investing in that market for around 3-4 years now, but after 3-4 years of investment, we finally, with a third fund, got the confidence of setting up our local team over there and really going deep into the market. But apart from that, like in Indonesia, Singapore, we've been active for the last 9 years, just like in Japan. So we're pretty diverse in terms of our geographical presence, and we feel that's a sort of competitive advantage against funds. When you go to an LP, they'll typically ask, okay, you convince them that this asset class, VC as an asset class, is a great asset class to be investing in. And then you have to convince them that, Asia investments as an asset class is a great, Asia VC investments is a great asset class to be investing in. Then you have to convince them about the further depth of the market. But then, the natural question is, okay, like in India, there are some 50 odd funds which are focusing on the seed stage. So what is different about you? And I guess for us, we are lucky to have a very clear answer that we are probably the most geographically diversified fund from an Asian investments perspective, which is very helpful to the portfolio companies when they start thinking about expansions across Asia, or to be leveraging on the fundraising from the rest of Asia, right? So that's the sort of angle that we bring to the table, and that's what companies also tend to enjoy. So I hope I answered your question on the...
Sure. Yes. So yeah. we touched upon the macro impact of COVID and particularly lockdown. In your case, where you mentioned at least 60% of your portfolio has been impacted. But what's your take on the micro short-term challenges which are likely to arise, either for your portfolio companies or the companies in general in India, the startup community, and what should they be working towards, at least with a timeline of 3 months?
Right. So obviously, the biggest challenge is lockdowns, right? And that affects you on both bases. Like it affects you on the business perspective, right? Like on whatever you were doing pre-lockdown, I would say, instead of pre-COVID. And the other challenge is, of course, the team, right? Like your team gets disrupted, and as a result, you have to come up with a better means of productivity. Remote work, etc. Right? So, and for the next 3 months, even though some of the lockdowns are likely to get lifted, it most likely will be a phased uplift of those lockdowns, right? And which means that those challenges will tend to remain in the market, right? So the companies are definitely trying to come up with, as I said, creative ways to mitigate these situations, both on how to manage work internally for themselves and reprioritize work, And then secondly, on the business side, how do they um, live in both the immediate short-term sort of environment, as well as what would be the long-term consequences of both COVID and lockdown on the market, and how do they reposition their business for success in the future, right? So I think the short-term challenges are something that actually CEOs and founders are very good at figuring out, right? Like, I mean, they understand that, hey, business is impacted, our cash flow is severely constrained, and as a result, we have to come up with newer ways to mitigate that. Like, a part of it is just increasing revenues in other forms and factors. A part of it is just trying to increase margins as much as possible. And a part of it is trying to reduce costs as much as possible, right? So those are sort of the three-pronged simple approaches that founders would normally take. And they're pretty good at handling those kind of three things, right? I think where most founders find it more challenging and where VCs tend to sort of be a bit more helpful is thinking about the long term, right? And thinking about how does this impact overall trends in the market? How do you reposition the business for future success, right? So I'll give you an example. We have a company which serves doctors in the Indian healthcare environment, right? And they provide a SaaS solution to doctors. This company called Medtrail. And earlier they were pretty restrictive on coming up with teleconsultation as a feature, right? This was because they always thought that teleconsult is not a high engagement feature. It's not something that the doctors actually care about. And they are very focused on building doctors first, right? And I think after this situation, we spent a lot of time discussing whether we should be enabling teleconsult or not. And we came to the conclusion that we should enable it not for the current situation for the first 2-3 months of this lockdown, because we expect lockdowns to get lifted, and then the old behavior coming back in of people just coming into the clinic to get diagnosis, right? But what we realized was that in the future we should be having some sort of a feature which helps these doctors enable care for chronic patients that they already have, and to be able to do follow-up with them. And as a result of this, like after this realization, we discussed with the doctors, did a lot of surveys, and finally launched that feature, which is now being picked up very actively by doctors, and actually in the same sort of scenario as we were thinking. So this requires a bit of like foresight and thinking, how will the market react and change in the next 6 months, 12 months, 24 months? So I think that's where VCs spend a bit more time with founders. Sure. Yeah.
So we've been speaking with a lot of people from the industry, and while everybody's trying to grapple with the situation, what lies ahead, this is a very unique situation. None of us have been in such a situation where we've witnessed a lockdown and a situation where businesses have been severely affected. And while as VCs, and as you mentioned that you have a fund to be deployed, we've folks have the dry powder, they're still scouting for startups. We still need to invest the money of our LPs and identify the high growth opportunities. So from that perspective, while the situation is unique, how are VCs and how it's tried looking at sectors, and what are the trends which you are seeing? Which sectors do you feel right now are likely to be clear winners or possible lucky winners going forward?
Right, very true. So I think firstly I would qualify the first part of your statement, which is like the LP push. I think a lot of founders have this misconception that because we just raised a fund, we need to deploy it, right? I don't think there's any kind of need or urgency on us to deploy. Our funds usually are 10-year. Most funds are usually 10-year horizon, and we've always said in the first 3-4 years is when we would be deploying most of the capital, right? And there's obviously always that leeway of 6-12 months that we already have baked in our fund models, right? So it's not something that we need to do. But on the flip side, I would say that the current market is is a great opportunity to be finding good companies, right? And we can discuss like why that timing is great right now. I think we can discuss that later. But I want to first answer the question that you had about which sectors then should we be looking at, and what trends should we be looking at. Very frankly, I think it's too early to say what goes up, what goes down, what stays flat, right? Like this is almost like a weekly changing dynamic behavior, and we have to be very close to the ground to understand what is really going up and down. But that said, I think we have prima facie like identified a few sectors. And going back to what our thesis is very simple actually. We tend to invest mostly in B2B companies, in B2B tech. So consumer internet is not something that we spend a lot of time on. Almost 90% of our investments go into B2B tech, right? Within that, we classify it into two buckets. So when investing in India, we have these two buckets that we really think about. On one bucket, we have all the SaaS companies, which are global SaaS companies. So these are companies like your Freshworks, ChargeBeat, Metrics, these kind of companies which are building SaaS solutions for the world, sitting out of India. And they could be targeting SMB, mid-market, enterprise, sitting out of India and building for the world, right? So that's the first bucket. The second bucket is what we call SME enablers. So they help sort of the local SMEs, because mostly the GDP drivers of emerging markets are SMEs. Then they focus more on the SMEs locally and are trying to help these companies, these SMEs, adapt technology essentially in their day-to-day processes, in their day-to-day lives, right? And so those are SME enabler bucket that we call it. So two simple buckets, global SaaS and SME enablers. Now we've identified certain sectors in both of these that we feel are probably something that we should be looking at more right now, right? And I think for the SME enablers, which is sort of local demand, it's very simple. It's just following the Maslow's law of hierarchy, right? Like, so it's basically saying right now and for the next 12 to 24 months, what would be most important are basically covering the basic necessities of the human behavior, right? And these are very simply your food, your, in this case, not really clothing, but health, right? So food, health, and your education, right? These are sort of the three, we feel, the basic necessities that need to be really fulfilled, right? And so those sectors will likely do well, and will continue to do well, or let's say not go down, even if there are recessions and multiple waves that come into the market, right? So within food, like very simply looking at like both the grocery side of the market, and which is more on the kirana side, and how can we enable kiranas to do better, as well as on agriculture in general. So the whole supply chain in the agriculture, and I believe 100x also has like a couple of investments in that space. So those are quite interesting for us also. Then yes, on the health side, we're spending more time on pharma as a vertical, and how can pharma, because pharma is likely to continue to do well in this situation for the next 24 months. So how can we see inefficient towards that area? And then education, we already have exposure to via investment in Classplus, but also we're digging into other aspects, especially those enabling remote work for teachers, etc., on that space. So those are sort of on the SME enabler side. And then on the global SaaS side, we're looking at two sectors. One is dev tools, which is sort of, when there's a gold rush, there's a popular statement, when there's a gold rush, you shouldn't be investing in mines, you should be investing in shovels, right? So dev tools is sort of the shovel for the tech industry in general, right? So when looking at B2B SaaS, when SaaS in general is going to grow, because you and I are using these new solutions like StreamYard that we never really heard of, like what really needs to be developed are the underlying infrastructure and tools to enable this to happen, right? So DevTools great focus of sector for us. And I would say the last one is customer success. So because a lot of companies are facing, challenges in how to maintain that same level of customer relationship, as well as give them the right kind of service, as well as reduce churn. So that's a very big focus for SaaS companies right now, and so that's where also we're spending a lot of time on. Sorry, long answer.
I think pretty apt, and I think a lot of insights over there. And and while we discuss the most uh, active sectors that VC should be looking at, eventually the reality is that this lockdown will end. People will get out. People will start socializing, maybe at an arm's length, but they will. And in these circumstances, whenever that happens, what do you feel would be the impact on sectors like your CPG, retail, tech? You mentioned kirana stores, obviously, and they've been the helpline, the lifeline for a lot of communities as opposed to e-commerce players in the lockdown. But how do you see the CPG sector and the retail tech sector very quickly? A quick one-line thought once the lockdown lifts.
Yeah, I think it'll continue to grow. But again, CPG has like multiple categories underneath it. You can even see a lot of McKinsey reports, etc., and Nielsen reports coming out on which subcategories within CPG and FMCG are doing well and which ones are not doing well. But I think overall, people will, at least for the near future, consume more from the CPG perspective, from fast-moving consumer goods especially, because they're likely to be still holed up inside rather than be outside. And we also expect multiple waves of this situation coming in, right? So there will be some ripple effects. But also on the flip side, there could be a recessionary phase where luxury goods and premium goods might not do well. So I think in India, we always need to be focused on like what the Bharat really needs, right? And that's where I think we are also spending time from a CPG perspective.
Got it. So, what is your advice to the startups in India, in Southeast Asia, in terms of leveraging this lockdown as an opportunity? What should they be building out? How should they be pivoting? What are the new pivots which you've seen, which are likely to be here for the next few months? Everybody's working from home, so clearly that will become a trend. A lot of mid-sized companies and large organizations have already declared that for the next few months and a year. I think it was TCS would mention 2 years. They've decided to work out of home or their employees. So under these new methods of operating businesses, what is your feedback? What is your advice to the startup community and founders?
Right. So of course, like this is very sector dependent, right? And like business to business dependent. But I would just say that, founders should not take anything for granted in the current situation, right? Like we did get hit by a pretty big black swan event, and you should just go back to the drawing board, right, and test all your assumptions, and just make sure that you're in the right business, right? Don't try to make it just work because you feel that there's some hope that things will come back, etc., right? Just think about it it's a new day, it's a new world, it's a new era, and now is the best time to be building something which is critical for this 2020 to 2030 decade, right? And as you said, a lot of new behavior will shape up from this situation. And so, startups and founders should be just willing to think a bit long term, a bit ahead, and be able to predict for their sector, for their industry, how is this going to really impact them, right, in the future. And just, take a 5 to 10 year view on the market and just build based on that, right? Don't fall into the sunk cost fallacy, essentially.
So the big elephant in the room has been for the last 1 week the Facebook and Geo deal, and how do you see the piece impacting the whole ecosystem? Obviously, it's been a great motivator. I think we've seen some activity in the ecosystem and the ripple effects of this particular deal. And my my last question from my side, and we've got a set of questions from the audience as well. But would like to understand, with the whole Geo Facebook deal happening, the activity is still alive in India, and your thoughts in terms of why India could be, a good opportunity, a good investment ground for domestic as well as Asian funds, and this has been the case. We've been seeing a lot of Chinese funds and Japanese funds coming in for the last multiple years, and now we've seen multiple transactions in terms of JVs and mergers and acquisitions. What do you feel is the impact of foreign investments in India in the next 3-4 months, and why this time could provide a great opportunity for investors to come in and look at startups?
Right. So I think it's great. Let's talk about the Facebook Geo deal in a bit, but I'll just sort of that's the elephant in the room. We'll definitely address that. But I think on the foreign investment bit, look, I think it's very clear. India needs foreign investment, right? Like, this is very clear. And as an Indian who is sort of sitting outside of India, I'm very much part and parcel of making sure that flow happens, right? Like, I'm trying to get Japanese dollars to come into India, right? Like, that's my responsibility, and to be invested in the right places and reap returns so that more dollars keep coming into it, right? So I think India is a hungry market. We're an emerging nation. We don't take too much debt, so we should definitely be selling more equity, right? And that's the right way to build the business, right? Instead of taking debt, you should use equity, right? So that's definitely something that we should be doing, right? On the flip side, I think foreign capital should be leveraging India more than anything at this point, right? Because if you look at other markets, like, every market is struggling, including India right now, right? But India, having the population that it has, having the sort of emerging growth market sort of fundamentals that it has, it's probably best poised to shoot up back after this whole situation resolves. Whereas I think the ripple effects would be much harder and stronger in markets like the US and Europe, right? Because they were already highly debt-ridden, and this situation will just increase that challenge for them, right? So I think from a very macro perspective, it's a great time to be investing in India in general, whichever asset class you're doing. But as long as you're betting on Indian consumer growth, Indian SME growth, then you're in sort of the right direction, I feel, overall. And then I think from a micro perspective, internally within the market, what we are seeing is, this is a great time to find great talent in the market, right? We've all come across these list of, layoffs that have happened. And for sure, like, there were some maybe people who were not the most productive and not pulling their weight, and that's why some of that layoff happened. But I'm sure that a significant percentage of those layoffs were good people, were very high productivity people, were very professional people that just were stuck in the wrong circumstances, right? And as a result, companies should be leveraging that talent that exists in the market, and we're seeing this in our portfolio already. So great time from a talent perspective, great time to be building new stuff, new opportunities, as we discussed, right? Great time from, if you manage to get capital, then a strong competitive advantage for you as a startup against that first mover advantage for growth, right? And I would say also from a investor perspective, great time from valuation perspective, right? It's always, these kind of resets help bring sanity into the market, and then that gives us, as investors, a better chance to make more returns on our capital, right? So I think from both macro, micro, from both inflow and outflow perspective, this is probably the best time to be looking at India specifically.
So
and then if you want, we can talk about the Facebook COD a bit.
Yeah, I think that is that still remains. We'll touch upon that as well, but also very quickly, unicorn and camels.
Sorry?
Unicorns and camels. What's your take?
Sorry, I didn't understand the question.
Unicorns and camels. We're hearing the new
Oh,
term.
unicorns and camels. Oh, okay. I think unicorns for sure. Yeah. Our
Got it.
business, unfortunately, we get nothing out of camels. I'm sorry. We're not private equity investors, we're venture capitalists. So unfortunately, we still have to ride the mythical creatures.
And yet, finally, before we move on to the question that we've got a bunch of them, how do you see this Facebook transaction with Geo
Right.
in overall
Yeah.
tier 2, tier 3 startup community and smaller businesses?
Look, firstly, I think it's a masterstroke by Facebook, right? I think, as I said, this is the best time to be looking at the Indian market. They probably got in at a highly negotiated valuation, even though they spent $5 billion to get 10%. But I would still say that's cheap for something like Geo, which has such a large user base and such high penetration and such strong brand recall in the market, right? So I think it's a masterstroke from their side. I think Facebook, if I'm not wrong, has some $20 billion of free cash flow every year. So if you think of it, 5 billion, even though it's a huge amount, it's essentially just 20-25% of that whole free cash flow that they make every year, and using that to get into one of the largest distribution networks within India, I think that's a masterstroke in general. And from an Indian market perspective, I think it will be very interesting to see how this partnership really unfolds. I think investing is just the first step. How do the two businesses connect with each other? I think that's what's most exciting for me. And I'm just wondering, like, what if this is sort of the first fundamental pillar for building a WeChat strategy in India, right? Which is, you have the messaging platform already, you have high engagement platforms like WhatsApp already, you get access to more distribution, and then Geo has so many other businesses that you can start layering on top of that messaging platform, and then slowly over time sort of open it up for other developers and other app providers to come and be part of the platform. So maybe one of the big reasons why China has grown fast on the internet sector is thanks to WeChat, because all of these applications, they don't need any new distribution. They don't need to get installs. All they need is to enable their features on WeChat, and suddenly, boom, like they have access to 1 billion people, right? And I'm hoping that something like this can be enabled for the Indian app developers and other people who just want to get access to the customer, right? So I'm hopeful that something like that happens, and then we can see who makes money out of it at the end.
Great. Thanks, Nikhil, for sharing your insights. And I'll quickly move on to the questions. We've got a bunch of them. So there is one question, and I will put it on the screen right now. It's from Amir Jamal, and wants to know the take on travel and e-commerce investments.
Yeah. Travel is going to be very, very tough. I think we have a travel-related portfolio company, only one. And, we are just preparing for a long, long winter because even though lockdowns might expire, even though domestic travel restrictions might uplift, but I don't see overall like travel restrictions to go away anytime soon in the market. So I think overall travel-related startups are likely to suffer a lot. E-commerce, I think, is very different, and we're already seeing a lot of e-commerce companies doing well, actually, in the whole current situation. And overall, especially in, for example, Singapore, we don't have any specific restrictions, so e-commerce has shot up rapidly, right? Like people would not have typically used e-commerce to get certain kinds of goods delivered, which now they're looking for. So I think e-commerce industry overall will do well thanks to this situation.
Okay. So the next question is by Akshish Sheth, and he's asking, is this a time for startups to look at JVs, takeovers?
I think the bigger companies will definitely do it. And we, even within our portfolio, some are being approached for this. So if there's a big company which suddenly sees a new sort of segment of their market opening up, which they typically would not have ventured into and just don't have the capabilities. Then because of the accelerated need, they would also look at sort of M&As and JVs. So yeah, quite likely that it'll pick up. But don't expect it to happen at like crazy numbers. I think it's going to be, still people will be quite cautious, like before splurging money. Yeah.
Got it. So I have the next question. It's a little longish, but I'll read it out. It's by Nitin. He's asking, how do you expect people's behavior to be impacted in the long term for buying consumables like fashion and cosmetics? Do you see a more permanent shift towards online channels?
Right. So I think long term, in the long run, we are all dead, right? Keen said that, and nobody really knows like long term what's going to happen. But I would assume that long term, like depends on how long term we're talking, but probably will just come back to normal in 3 years, 4 years time frame, whatever time it takes to get over the situation. Do I see a more permanent shift towards online channels? For sure. I think once people get convenience is sort of the key, and once you get things delivered at your home, and then you can just try it, and then you can return, as long as there are good return policies. I think people, once they switch to online, I don't see why they will go back to offline. So yeah, probably it's going to be a permanent shift.
We've got another question. For a SaaS product, how much investment in terms of dilution does Stripe work through at seed stage? So you can
that's a great question. So overall, actually, we have a very, how can I frame it, very loose policy on dilution compared to most Indian funds. In fact, we are the ones who are guiding founders always to not dilute too much in the early stage. I think Indian startups tend to dilute way too much in the early stage. I think we don't say like, hey, take high valuations and, take low dilutions. What we say is, you're in India, so use the advantage that you have, which is low cost base. And as a result, raise less and dilute less. So while typical seed funds would target, overall round dilution to be around 20, 25%, and they try to own themselves 15% in the seed stage, we tell the founders, try to dilute maximum 15%, and we'll take around 10% of it. So we try to aim for 10% ownership ourselves, and overall 10 to 12 is sort of the maximum that we like to take. And then overall, we try to tell them to limit dilution to around 15% in the seed stage.
Got it. Okay. So there's another question around valuations. Is the situation likely to change the valuation metrics to be more based on actuals like sales and profitability? Your perspective?
Well, look, I think depends on which stage we are talking. I would say Series B, C, I think it's going to be really impacted from multiples perspective. And obviously, they were already using multiples like revenue multiples and even like margins, etc., while considering the valuation. I think that's going to become much stricter. Series A, my guess is, will obviously also become a bit stricter in terms of revenue multiples, because they fear that Series B folks will definitely be paying a very strong sort of focus on multiples in general. So I think Series A, Series B overall will definitely start looking at more of revenue multiples and pay close attention to it. I think in the seed stage, we unfortunately don't have, because companies that either are pre-product or have just launched a product or are doing a few thousand or a few 20K, 50K, that kind of sales. And you can't really use multiples over there to sort of value them. And most of the valuation is set based on standard round sizes, comparables, and standard dilution, as I said. So typically in the seed stage, I don't see why suddenly we'll start looking at sales multiples. Unfortunately, we can't. Yeah.
Okay. So we've got two questions on EV. How do you view electric vehicle investments if EVs are being used for deliveries? That's the first question. Second one is, what about deep tech into batteries since EVs are going to be mainstream?
Actually, I won't even like. Firstly, we've not really spent a lot of time on electric vehicles as a thesis. It's one sector that we just tried to stay away from because it's been too much. I think it's just a bit too early to really come to any kind of sound conclusion on that sector in general. But that said, I have spent a bit of time looking at the battery tech. Even visited some research labs in Indian colleges which are working on electric vehicle batteries. And I think what I've realized is, firstly, with the oil price crash, if and when it gets translated into like consumer prices going down, EVs obviously are likely to take a bit of a backseat, even though the governments want to push it forward. But I think in general, consumers will do a cost benefit analysis and probably, at least in the short term, switch to oil. So I think that probably will have a deterrent in the whole EV adoption in general. So how will battery tech go increase? Well, I don't really know, unfortunately. Yeah.
Okay. We'll take one last question. Surbi is asking about mental health related to that. What's your view on that? We know health tech and care is here to stay, but within that, mental health, what's your take?
Yeah, for sure, a very important sector. I think within the whole healthcare in general. If pharma is sort of our focus, then I would say a side focus is on mental health. Two reasons, of course, the social distancing and social lockdowns, etc., would result in more sort of mental health challenges, and so I think that's going to be one problem that will need to get solved. That's a bit more short term, I think, in general, but potentially can lead to long term consequences. So that needs to be addressed. I think the second problem here is that, as you said, Shashank, that a lot of people will start considering remote work as a way to sort of, just work naturally, and that remote work environment will become quite natural. A lot of our companies are already saying, like, why do we need to have offices? And I foresee that a lot of them, given the kind of cities that we live in, with all the pollution, with all the traffic, are likely to encourage remote work, like if not just completely be remote. So once that remote work really starts kicking in and is definitely here to stay, I don't see why it's going to go back to its normal behavior. Then as a result of this, we are likely to see a lot of, again, mental health issues. I would say, I think mental health, we don't have to take it from a very depression-related lens, but just in terms of how do you change the typical human behavior that used to exist in the previous times, right? Like the other day, we were talking to a company which is trying to make meetings more effective for people, remote meetings, right? Like, how do you ensure that people are listening in a Zoom call, right? Like, how do you know that your points are going across well? So that's a very simple example of how you can think of it from a mental health perspective. What can you build to ensure that you're sort of adapting to the new changing behaviors of the customer, right? So I think that area will also get a lot of focus. Yeah.
Great. Thanks, Nikhil, for sharing your insights. And how can startups reach you, share their pitch decks, interact with you? The best way to communicate with Nikhil.
Right. So, I mean, if you want to directly reach out to me, then my LinkedIn is there. Like, it gets a bit spam, but like, I'll definitely try to read everything that I get over there. In terms of sending decks, I think one easy way is to just email us. So you can go to our website, stripe.vc, go to the English section, because as I said, we're multiple languages, multiple countries. So go to the English section and just leave your deck over there. Or you can email us at info@stripe.vc, and we'll get your deck. So that's a way to send in the deck. But if you want to reach out to me specifically, then LinkedIn is the best channel.
Super. Thanks, Nikhil, for taking the time out and being on 100x live session. It was truly a pleasure hosting you, and thanks for sharing your insights. look forward to working with you on some of the portfolios at 100x. We'll pick your brains on some of the sectors you mentioned and discuss the same. And look forward to hosting you again post COVID, and this time possibly at our office in Bombay. So look forward to that.
Yeah, pleasure was all mine. I think it's a great thing that you guys are doing. 100x. I think I've seen some amazing content already in the last few days, and that's a great example of how to, shift your sort of strategies, shift your processes to the online world, right? And I think you guys are doing a great job at setting the example for other VCs to follow. So pleasure was all mine.
Thanks, Nikhil. Thank you so much. Thank you, everyone. Take care.
Thank
Bye.
you. Take care, guys. Bye.